Yeah.
And so with the point of interest, sometimes like I would not mark those out, which obviously is not a great thing. And so I would, go into the 1 hour, mark the swing high, swing low, premium auction discount. But then sometimes I'd be like, okay, look, it's tapped to 618 and it's rejecting.
Yeah.
Let me go for a short here.
Yeah.
And then short it to maybe either the 50% or the 386 or the 382.
Very
And
true.
then it would just completely stop me out and then actually reject on the 786. And so
Okay.
I just wanted to know,
Okay.
like, your thinking behind it and why exactly, like, it does that and stuff like that.
Okay, I got you. I got you. I got you. Okay, so it's all with understanding. It's all with incorporating price action with the fibs. You can't just take trades with the fibs just to take trades with the fibs. It's not just okay. I want to buy for my 236 and sell for my 786 every time, no matter what. You have to actually have some type of conviction with it would coexist it with price action to understand what exactly price is going to do. It's not always going to sell from your 618 like this. So if you can see my screen, right?
Yep.
Okay, so for example. Right here, we got a beautiful rejection right here at our 618, but sometimes we might not. Sometimes it might come here, reject a bit, and we think we're good, but then it just buys and stops us out. And then it sells, right? And then it goes ahead and does what the hell it needs to do. And then we're like, damn. The reason you lose trades like that is because you're not incorporating price action. And it's very, very simple. So for this example, it's as simple as this. Where are we at in price? Okay. And where does price need to go? You need to have a magnet that pulls and something that pushes away. So if we're looking at price, we're like number one, we have a solid imbalance right here to the left of us. Boom. Bow. That's number one. So we know that price, we're not saying that we're going to sell from here and we're not saying we're going to buy from here. The reason I say that is because yes, we can have a beautiful reaction just like this. Boom, boom. But sometimes we can have a reaction just like this. Boom, boom. If you know what I mean. So we can have those two different types of reactions. That's why I said we don't care if it buys or sells. We're just anticipating a reaction. And if we get that reaction, and if we have a pull to the opposite direction, then we know to take that trade. So, for example, give me one second. Let me see this real quick. One, two, copy. Boom, boom, boom. All right. So my bad. Just like my bad, I got sidetracked. You always want to make sure that you incorporate price action with everything. So if you see that there's a level of resistance or there's a clear level of support, or if you have something pulling you down or pulling you up, what do I mean by that? If you have a level that needs to be retested below you, like for example, we know these levels need to be retested. We know price has to come down here. So we're like, okay, if I know price most likely has to come down to this direction, and we have something pushing us down, this is literally pushing us down. This is everything is pushing us to the opposite direction, and we have something that might push us up, but and we know that price has to come here. We know price has to find his way to come down here. I know that's kind of ugly, but price has to find his way to come down to here. I got to get me like a little writing pad or something. But anyway, let me turn off my Discord notifications. Hold on. Boom. Anyway, we know that price has to come down has to come down here, and we know that this is pushing price away. So now just off of that simply alone, now let's incorporate, you know what I'm saying, the perspective of the Fibonacci. We go ahead and we draw a fib from top to bottom. Boom. And then, just real quick, let me just draw this out. Boom. Let me pause the recording so it's not too long for the video. Zoom. All right, so you had a question and you said before I drew out the normal fib, you said why not start the fib from here up to here, right?
Just the previous low, like the very low, like to the left.
Oh, you saying from here to here?
No, no, no. I'm like lower down to the left.
Here.
Keep left. Yeah, right there.
So from here up to here.
Yeah,
You can, but the reason I'm saying to draw it from up here down to here is because we have something to push price down. Overall, we are bearish at
yeah,
price. We're overall bearish. And before price was down here, we see like, look, I'm gonna tell you why. If you follow price action, I'm gonna just show you visually. We're bearish, right? Okay, cool. And we know that we have multiple different ranges. Let me just fast forward this so I can show you better. Boom. So we have our high is high, most recent swing high, and our even most recent swing high. Boom. High, high, high. Cool. Now, from this range down to here, this is our macro range. This is the most macro perspective of macro perspectives. Cool. Within inside of that range, you have this range. Cool. And within inside of that range, you have an even tighter range that's right here. From here down to here. Why is it all, why am I only starting it from bottom? I mean from top to bottom? It's because we're bearish. If price was bullish, I would have to do each perspective from bottom to top. And price breaks out and I find a range inside of a range inside of a range. But since price is bearish, we have to do it from top to bottom each and every time. So once we see price break outside of these ranges, so we have let me just make this darker so that we can identify it. So this is our most internal range. So and this is how we will look at the fibs. You will draw your fib from the highest point down to the lowest point. Cool. So now that we know that, we can hold on, my bad. Boom boom. Okay, hold on. Okay, there you go. Let's delete this. I'm just trying to show you visually. Boom,
Yeah.
boom. So now we know we're inside of this internal range and we're bearish, so we start to fit from top to bottom. Cool. Now that we know that, we can scale down to our lower chart and take our trades accordingly. Look at that 236 tap. Boom. And we're just trying to take our trades accordingly. You want to sell at resistance and buy from support each and every time, no matter what.
Like again, you see how from the 618 it went up. It didn't actually touch the 786, but then it eventually came down.
Mhm.
What determines that like not to actually sell from the 618 and actually wait for price to reject?
I don't want to say anything determines it. I would just say it would. I would say price action. So let's just go back. So now let's look at price action. Let's find something that can explain the rejection at price in this region. So we can say before because obviously let's say since we don't if we're trading live we're not going to know in the moment, right?
Yeah.
Cool. So if we're trading live we're not going to know in the moment and we're tracking our highs and lows. We have a high here, uh-oh, high here, and a high here. And then obviously we have more here and more here. And this up here is obviously the highest point. Cool. I will be just tracking my highs. And if I know this is my 1 hour high, I'm putting a wick. I have price action videos out there also that aren't just about the fibs because I also teach price action. So I'm drawing out my ranges like this. One, two, three. I got one, two, three. And now let's say I already have my fibs. Boom. Because I don't need to mark it out anymore. I used to, but not anymore. So now if we're looking at price and we're seeing that price is giving us a rejection, I know that I'm either if I'm gonna take a sell anywhere. Hold on, let me make these bigger so that you can see them. If I'm gonna take a sell anywhere, I want to take a sell from either my 618, my the fit around the range of the 50% of my 618 and 786, or about the 50% to the 786. I'm gonna just show you visually. I'm either gonna try to take a trade here, gonna try to take a trade here, or I'm gonna try to take a trade here. Cool. So, what's the most earliest entry we can have? If the most earliest entry we can have is this one, and you know that you want to buy, I mean, you want to sell at your highest point as possible, and you want to buy from your lowest point as possible, but you also know that you don't want to, you know what I'm saying, miss out on any trades, and you also don't want to get in too early, which one do you think is the best option? The highest one, the one in the middle, or the earliest one?
The one in the middle?
Exactly. So let's delete these, all of this shit now. Boom, well, not the price action. You just delete these. And you just said it. And this is how I perceive the market. And you just answered it correct. I don't need to delete that either. So if I'm taking the one in the middle, and do you know or do you remember when I said that we take trades at the 50% of all of the spaces in between?
Yeah.
Okay. And you know that we'll have a 50% region in between of the space in between. So the entry would have been about right here. Boom. Make the biggest point. And then now we can delete this. If we know that we're trying to enter in the middle because we just identified that we don't really want to enter all the way up here because we don't want to miss out on anything. And we don't want to enter here because we also don't want to get in too early. So the best option would be the middle. Your entry is going to be the 50%, is it not?
Yeah.
All right. So let's have our entry here at the 50%, sell. And you're going to allow price go drop down to your 15-minute time frame. And you're going to have your stop loss at the 786. So worst case scenario, you get stopped out, but you can get right back in if price rejects. That's why I take 2 trades per day. This is why the way I trade is so effective. Stop loss is about right here, targeting a 1 to 3 risk to reward ratio. Oh, let me bring this over some. And this is my trade. Boom. And this is how I decide which trades to get into and what trades not to get into. Stop loss here, take profit here, and I allow price to play out. So this just answered why and how to get in specific trades.
Yeah, so and then if it from a 618 just rejects, then you miss your entry, but like, oh well. All right.
Yeah, exactly. Exactly. And if price just comes up to the 618 and then does not go up no higher and just comes right back down, I'm just like, ah, damn, I didn't get the entry. It's okay. You know what I'm saying? It is what it is, but it's most probable for price to at least come to the 50% of the 3 different options. You have your earliest entry, your latest entry, and the one in between. So we're obviously going to choose the one in between because that's the what? The average. And we went ahead and, spark take profit from there. Boom. Simple. And that's how I take those types of trades. Now, like I said, I incorporate price action. So even before price, this is going to be a really good video. Even before well, while I'm in that entry, I'm incorporating rejection levels. I'm looking for rejection. And I'm looking at price and I'm like, damn, we have a lot of rejection at our 236 and 382. We have a like price literally failed to close at our 382. Here, price rejected here, rejected here, rejected here, rejected here, rejected here. I'm just like, damn, but this is a lot of fucking rejection. What is price doing? And honestly, bro, I don't even put a lot of emphasis on my boxes. I honestly just find the area that touched the range and I just draw out the wick of that. So bow. That's how I draw it out. So I'll just be like, yo, this is a clear level of support, and I'm trying to buy my 382. Simple. Or I might get stopped out and I could, what I'm saying, take an entry here at my 236. And you might be wondering, hey Z, why would you take an entry at your 382 and not your 236? Well, I'm gonna answer and say I'm taking an entry at my 382 because the 382 had way more rejections than the 236. Would you agree?
Yeah.
So we had hella rejections here. So price is more prone to react here than it is to react here. So I want to get that impulsive entry. Worst case scenario, I lose it and I can enter again. So let's see what happens at price. We already hit TP on this trade. We know that. And let's say we have an entry at our 382. We trying to buy the three. Oh, we try to buy our 382. Boom. Entry. Damn. We might have got stopped out actually. Hold on. We might have gotten stopped out realistically because our stop losses wouldn't have been this big. Wait, maybe. They might have been. This is a 121 pip stop loss. So let me see how much 121 pips is. If Oh yeah, we're good. Yeah, 121 pips. Yep. That's how much I risk, 121. So if you look in the red box, it says 121. That's how many pips we're risking. So I'm just matching that up to make sure I'm risking 121 pips, and 121 pips will actually be down here. Damn, 121. Stop loss would have been here, targeting a 1 to 3. Sometimes I'll target a 1 to 2, but let's target a 1 to 3.
What determines that? What's your difference? Why 1 to 2?
Sometimes I take a 1 to 2 only when I draw like a third Fibonacci or I'm on the 5 minute time frame.
Right. And
Be-
how long do these trades last in general? Like it seems like it lasts quite a long time.
Maybe shoot. Honestly, it may seem like it takes a long time because I'm back testing, but throughout the day, bro, I'd say my trades maybe take 2 hours, 3 hours max. I take two trades a day. I wake up. I'm West Coast right now. Um, so I wake up at 6:15. So I trade anywhere between 6 to 9 a.m. So which is 12 p.m. Central Standard Time. I mean Eastern Standard Time. So I trade for about 3 hours a day, and my trades can take anywhere between 15 minutes all the way up to 2 hours. And I trade New York session. So a lot of these trades, bro, I mean, I don't really necessarily trade New York session. I do trade around the clock. So if I get an entry after market close and reopens around Asian session, then I'm gonna take that. And since it's Asian session, I can hold that trade all fucking night until market close. Well, not really all night. I can just hold that trade for a very long time. I can hold that trade for pretty fucking long until the market closes again and reopens because it's futures. You know what I'm saying? So you have enough time. You have enough time to take these trades, and these trades are big trades. But don't get me wrong, you can take trades on a 5 minute. So, like for example, this entry would have hit take profit. Imagine you decided to take, yeah, this same trade we took here, you would have taken just like this on the 5 minute time frame. You would have said here, this would have been the entry. Oh shit. Ah, you might have gotten stopped out, maybe. Let's see. But I know exactly where your stop loss should have been. And here, your stop losses would have been at this range right here, and your take profit would have been a 1 to 2. On the 5 minute, I only target a 1 to 2. In the 15 minute, I target a 1 to 3 because the 15 minute is just more, it's the levels are stronger. On the 5 minute, it's way quicker to reject. Would you agree?
Yeah.
Yep. So boom, here's an example. You could have took a trade right smack dab here and been like, wow, TP hit. And like it may seem like it's hella long, but this is 2 hours. It's about 2 hours. Yeah, it's a 2 hour trade. And it's like, hey, 2 hours, you just made 1,200. Boom, done. And you can trade again. So now the day goes by and you know you already have your support marked out. You know exactly what you're doing. And there's no candle closure above this level. So you can take another trade here if you want. But me personally, I'm not gonna take another trade there. I'm gonna wait for the retest because I be kind of scared sometimes. So I would have, if I'm on the 5 minute, I would have waited for a retest. And as soon as price retested, 5 minute time frame, I'm taking the exact same trade again. Boom, right on the retest. Take profit hit. I'm targeting a 1 to 2. This trade hit TP in 5, 10, 15, and 20 minutes. So you see what I'm saying? That's the difference. So this trade took 2 hours. This trade took 20 minutes. It's very much so possible. So
Yeah.
does that make sense now?
Yeah, it does.
Okay.
See, for me, I can trade Asia session, London session, and the first half of New York.
Okay, yeah, bro, you're good. You're good. You have no reason. Yeah, you're good. Just trade whenever you see an entry, man. Just take the damn trade or have a limit. You know what I'm saying? We utilize limits and trade gold, like snap on gold because NQ you can trade NQ. NQ is good, but it's mainly for New York session. But since you're able to trade in London and Asian, bro, trade gold. Gold moves all the time. It moves around the clock, and I low key trade around the clock. So that's that. Um, but yeah, this entry, let's see how this entry plays out. Targeting a 1 to 3. Damn, look at that. Oh my God. So even if we missed it, even if we missed the trade, look at the re-entry.
Yeah, perfect.
382. Re-entry. And I like this trade could have been hit TP. Imagine you were on the 5 minute time frame. You would have hit TP in 15 minutes if you would have got a re-entry right here. Perfect. Awesome. Now, go back to price and we see, let me delete these ranges because it's kind of confusing us. I don't want to confuse us. Boom, it's kind of confusing me, I ain't gonna lie. All right. What line is this? Is this a no, yeah, exactly. Okay. It was confusing me, bro. I ain't gonna lie. I had too many lines on my damn screen.
No, you're good.
All right, let me go back. Let's clean it up. I gotta keep my chart clean.
And so your stop loss for the 1 to 2 on the 5 minute, it's just where would you hold that?
On for what trade? For this one right here?
Just for like you when you target a 1 to 2,
Whenever I
and
target, whenever I target a 1 to 2, I just put my stop loss at my most recent. It's just, I don't know. Honestly, I'm gonna be honest with you. I don't even have an explanation for the trades that I take with my stop loss. Look, let me go to the Discord real quick for my stop losses sometimes because I just know where to put my stop loss based on experience. That's honestly what it is. Like, damn, why is this taking so long? It's honestly based on hella experience. Hold on, let me.
Because I have that issue a little bit, like a level of perfection, like trying to get perfection. Like this is exactly where I want my stop loss. This is
Yeah.
exactly where I take profit.
So like for example, here are some trades that I've been taking. This trade was on the 5 minute time frame. That's my stop loss and that's my take profit. Literally, for some like literally, I just know I knew I wanted to target the 50%. I mean this is the 50% of the space in between, which is the 786 and 618. So I just made my stop loss a 1 to 3 of that. So cool. That was a TP. This trade right here, cool. Same exact thing. I wanted my take profit to be the 50%. So I just made my stop loss say a 1 to 3 of that. So that was a trade until it said 3. So I know it was a 1 to 3. Another example. Same thing with this. This one right here, bro. Low key, I wanted to take this trade to the 618, but my 1 to 3 was a little bit further. So I just said, fuck it. Boom, 1 to 3. My entry was at the 236 and my stop loss was right above the 50%. Something always aligns. Like something always aligns perfectly. And these are just videos. And then with these trades right here, the only reason I took these trades right here is because the first entry, I had nowhere to put my stop loss. So I literally put a random stop loss. And then that trade hit TP. So on the second one, I just made that one the same exact size. Then with this one just took way longer, but same exact size. And then the third one, the last one, I made a little bit smaller because that's the third time. And I'm just like, damn, that's the third time you done came down. I don't know if you're gonna really like, continue to reject. So that was that one. And this one here, I just put my stop loss right above the wick. I knew I wanted to target my 786. This was a quick trade. This was right at like 6:30 or 6:15 and the market just fucking opened. So I wanted this trade to be a real quick trade and I did not want to lose it. So I low key made it real fast. It hit TP real quick. My stop loss, I was like, fuck it. I'm gonna just put it right above this wick, which is also above this clear support level that was supporting, which isn't now. So boom, TP. Next trade here, I put my stop loss just above. So this range, this 618 range, is exactly what we have on gold. Well, not now because we're back testing, but it was a 4 hour wick. Is this wick right here? That range that you just saw is where current price is at now, and this right here. This little range right here is this shaded red area here. I got my entry at the 618. I put my stop loss above that range, targeted a 1 to 3 of that, which so happened to be my auction. The reason why everything aligns is because it's the Fibonacci. It's a mathematical term that's just like you find it in nature and everything just aligns. Same thing with this entry here. I just put it right above. Boom. Um, these are the same exact trades or whatnot. This one right here, so with this one, the only reason I took it like this is because I took it with Romel. Romel took the same trade as me, and he helped me realize that price could reject from here. So I was like, damn it, I'm gonna just make it. I'm gonna just make it a 1 to 2. So I put my TP at the lowest point, and I was like, okay, whatever my stop loss is gonna be, that's just what it's gonna be. It's gonna be a 1 to 2 of that, and that was my TP. And this is, today. So hopefully that explains a little more. So it's kind of like it's always based on some type of level. So like right here, like let's see. Well, first let's see if it hits CP. I don't want to talk nothing unless it proves itself to me. Like I know what I'm talking about. Thank you. Okay, so outside of that, even like we like this trade here, took this entry. Okay, cool. Where would I put my stop loss on the retest of this, right? You may be wondering like, yo, where would you put your stop loss? Okay, number one, we're always gonna have a 50% level in between. Always in the spaces in between, I always eyeball them. I say that in all my videos. I eyeball it. Boom. And then also we're gonna have a space in between up here. I told you that earlier. Boom. So if I know I need to get a retest entry right here on the 15 minute, I wouldn't want to take this on the 5 minute. I will try to take this on the 15 minute. This is a pretty strong rejection. It's clear as day. Um, it's a good entry. I will want to put my stop loss at the 50%. The same area where price rejected. Price already rejected here once, so it shouldn't come there again. And it rejected here. Once it rejected here, it literally rejected, did its thing, and then came back. Rejected, did its thing, then came back. Rejected, did its thing, Hopefully it doesn't come back, but I was like, fuck it. So we went ahead and took that entry. I would have taken it here, had my stop loss either here or my normal amount if I'm trying to be fixed, which is 121, which literally is damn near the same thing. That's crazy. This one's 120. Damn near the same thing, targeting a 1 to 3. Bam, bam, bam. Trade after trade after trade. Yes, do we lose trades? Of course we lose trades. But man, look, the way we've been hitting all week, it's been kind of crazy. Like even on NQ, my bad if I'm going on a rant. Do you have any more questions? Hopefully what I said explained it. My bad. I kind of got in like a flow state just trying to explain it to you how my stop losses are or
No,
whatnot.
you're all good. No, no, I'm enjoying this.
For sure. Okay. Hopefully it's helpful, man. For real. Let's go to NQ. Now with NQ, um, these were the trades we were taking. I'm gonna be honest, I'm not gonna show it too much, but this is another way that I trade the fibs, and it's my order flow model, but I'll show it to you real quick. I'm gonna post it on YouTube so people will see it. But this is my order flow model. Instead of having a 50% in between, you draw another fib in between, then you take trades off of your 786. And that's what
See,
I did. And that's
I've
what
been
I,
waiting.
huh?
I've been waiting because like even on all your live streams, you're like, wait, this is sauce. Let me pause the recording. And then I'm like, ah,
So it's like, but it's very, very simple. I'm not gonna tell you which direction to do it in. I'm gonna let you figure that out. But it's a way, and it's my order flow model. You just ping pong it. You want to sell from the highest extreme and buy from the lowest extreme. Same thing with down here. Same thing with down here. If I use my order flow model, well, you finna see how I draw it out. But boom. 618, I would have tried to sell it from the 786, so I low key would have probably missed this entry. I would have been mad as hell. I would have missed this. Okay, cool. But
you
price,
drew, you drew a fib inside of a fib inside of a fib.
of course. Yes, sir. I do that for NQ. That's the only way I trade NQ. I use fibs inside of fibs. I start my normal fib from the weekly chart. Boom, fibs inside of fibs inside of fibs. And then we're down to here with it. So like entries like this, I'm gonna catch. So like and nobody knows how. That's the thing. I'll tell somebody, oop, caught a 786 entry. They'll be like, what the hell is that? Hey man. So like for example, this entry down here, I would have lost. I mean not lost. I would have missed because I would have been trying to sell for my 786. But I got the entry here though. Bam. Where's my stop loss, you may ask? My stop loss is at this 236. If my trade is here, I'm telling you, man, everything's gonna align. I'm gonna have my stop loss here. Got to. Boom. That's the only other psychological level to have your stop loss. Why the fuck would you put it here? Why would you put it here? Why would you put it here? Bro, put it to the next fib level. Or maybe put it a little under it. Okay, cool. But I would have had my stuff just like this. I would have got the early entry, got scared as hell, went in the drawdown, smack TP. Simple. Boom, 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 boom. Order flow model. Meaning, just in case I got stopped out, sometimes I do put, but just in case I might get stopped out, if I am scared, I'm not even gonna lie, bro. If I am scared, I will sit here and put my stop loss. I know I just talk shit about people that might have put it stop down here, but now I'm finna validate it. I contradicted myself, but I sometimes I will put my stop loss like this and just take it up to here, and I won't get a 1 to 3. Why do I do that? Is because price may stop me out, but I want to give myself enough breathing room just so it can hit the 236 and give it enough room to give us a wick or so, and boom. You know what I'm saying? Because it does that all the time. So yes, I will take some trades like that. But ultimately, man, and this is the trade we just hit TP on today. I didn't even know it was gonna hit TP. It took forever. I took this trade at 8 o'clock, 8 a.m. It didn't hit TP until 12. 4 hour trade. But man, at the end of the day, man, when you in a trade, let that trade rock out and let it do what it's gonna do because the fibs are gonna always outperform what the fuck the market think it's gonna do. And that's a bold statement. The fib is gonna outperform the market, and that's a really bold statement. The market, like all of my levels are predetermined. That's why my strategy is pre-market design. Pre-market, not pre-market as in wake up before the market open. No, literally pre-market. I draw my fibs before price comes to them. When price comes to my fibs, price respects my fibs. And it's not even my fibs. I don't want to say that. It's just a universal thing and I came across with it and I'm sharing it to everybody else. Y'all can trade it. Whoever want to trade it, whoever want to make videos on it, I do not care. But the dates will show who, you know what I'm saying, who came out with it first. But outside of that, it's not even that deep. This is a trading strategy. It's highly mechanical. You haven't seen it nowhere else on YouTube, and no, not a lot of people can say that. But it's just a really good strategy, and I want everyone to use it. You can use it as what I've been showing you now, an entry model, because you can use it like that, or you can literally use it like this. If you already have a great entry model, man, trade the direction model. Take off all the fibs, draw the fibs, and then draw out your ranges. After you draw out your ranges, delete the fibs. And now go ahead and trade however the fuck you want. Your fair value gaps, your blah blah blah, your this, your that. Okay, cool, no problem. No worries. Every strategy works. But at least apply the premium auction and discount. Because I promise you, it's never gonna do you wrong. So that's all I gotta say. And hopefully that like broke down everything. And all of this is recorded. I broke down all of this in less than an hour. It should make sense. If it don't, bro, fine, just let me know and I'll go in well way way deeper. But this should have explained why I put my stop losses the way I put them, how to put the fibs the way you know what I'm saying you should put the fibs and why I put them the way I put them, and just perspective on the whole shebang of a little bit in
Yeah.
depth on how I trade it.
Yeah, no, this strategy definitely calls out to me. See, so when I first came across this, I was like, yeah, sh well, like shit, I really like this one, and I also like Holy Grail. But
Mhm.
I'm in
Holy Grail
a
is tough
stage,
too.
I'm in a stage right now where I'm able to see it. I see the Holy Grail, but sometimes live in the markets, I'm like, oh, is that an order block? Is that an imbalance? Is it gonna come there? I'm not sure. Whereas with this one, it is more just like, yep, it hit that level, perfect. I'm taking a long, I'm taking a short. A question I had was, you remember how initially when you were about to show me the fibs, you were going to start it from the swing high on the 4 hour to the swing low, and I'm like,
Yeah.
oh, why didn't you take it from the other one? And then you're like, okay, let's take it from this one.
Okay.
Which one, like, would you take it from? Could I take it from both? Like, do you know what I mean?
Um, yep. Vaughn. So there's a dude in the Discord. His name is Vaughn, and he just asked me that. I'm not gonna pull up our DMs, but he's a cool person. He know how to trade. He's doing good. He asked me the same thing, and my honest, simple answer is you can do it how you want as long as you're following price. So as long as you're not sitting here trying to draw a fib like this, like if you try to draw a fib like this from here to here, you're dead wrong. What are you doing? Stop. Please stop. You know what I'm saying? Like, no, man. If you're trying to draw a fib like this, and you're doing it from this wick down to here, nah, man, what are you doing? Like, come on, bro. No. But if you're doing it either like, like this, because you're drawing it from a macro perspective, which is true, and which explains every tap, the consolidations, and if I even drew a fib inside of a fib, this is going to be my 786 retest.
So on gold, you still can draw a fib inside of a fib.
Of course, if you want to, yes, man. Everything is ranges, and everything is a fib inside of a fib if you want to draw it like that. For example, look at these taps. 786, 786, 786. Price is going to always retrace, and it's always going to come back to the same levels it wants to reject from each and every time. But
Even if
anyway,
I
go ahead, go
blindly
ahead.
buy, right? From each level, if I sell or buy blindly, not worry about like, oh, there's rejection here, there's this and that. If I just blindly buy from the 236, sell from the 618, the win rate will still be way over 50%, wouldn't it?
No. Nah, I wouldn't say it'll be over 50%. Nah, the strategy, I wouldn't say is based on 50%. The only way your strategy would be 50% if you are also mechanical with it. How can I, like, what do I mean by that? Let me show you. I'm gonna try to wrap this up in about 3 minutes just so this recording can be ended real smooth, but we can finish this on Discord.
Perfect.
But initially, like for example, you don't you on okay, if you said it like this instead, if you said if I only buy from my 236 and only buy from my 382 and only sell from my 618 and only sell from my 786, would I have a 50% win rate? I'm gonna tell you yes, you will have a 70% win rate. If you only buy from the 236 and only sell, I mean, and only, but if you buy from the 236 and buy from the 382 and then sell from the 618 and sell from the 786 on the 15-minute or 5-minute time frame with a fixed stop loss and a fixed take profit, you will get the reaction that you need to catch fat ass trades like this all the time, where a price just comes up and taps and then just runs away and just runs away. Like even entries like this, bro. This is what I'm saying. Entries like this are can change people's lives. Like you get an entry like this, literally on the retest. You have your stop loss and you have a TP. Boom. Oh, well, not this one. I meant this one. I'm tripping. My bad. You have a TP. Whatever the hell you take, bro, that's TP. If price flips it and use that, take that same damn trade and use it as support. Same exact size stop loss. Stop loss, TP. Boom. Over and over. Same thing right here. For example, if you try to buy it again, but it hit stop loss and you're like, fuck, it hit stop loss. All you're gonna do is invert it. Bet, invert price. Bam, TP. Boom, we're gonna do it again. Price came right back up. I'm gonna take it again. Boom, TP. If this trade would have lost and instead price went up and started to come down, what I'm gonna do? I'm gonna buy it. Boom, TP. You see what I'm saying? And out of just off of right here, I hit TP one, two, three, four times and hit stop loss one, two times. So you can trade it just like this if you really wanted to. That's the thing. But it's like, do you want to? I'd say no. Your chances of winning are way higher if you actually add price action and actual, logic into it. But can you? I can bring my little brother in my room or take someone I don't know and just tell them, yo, take trades. This is how much you risk. Put your stop loss here, put your TP here, it's trade, and just don't know nothing, but take your trades here. He's gonna come out profitable.
Yeah, but then there would be no mastery
Yeah, there'll be
over.
no mastery. Exactly. You'll just be empty and you won't be knowing you don't know what you're doing. But that's why you have, psychology, and that's why you have God. He's going to teach you lessons within. So yeah. Oh snap. This recording is about to be over. So I'm gonna wrap it up here and then we're gonna